Good evening, and welcome to the ShadowTrader video weekly for Sunday, December 23rd, 2007. Options expiry week, last one of the year of 07, just finished up and is now behind us, giving somewhat of a bullish tilt to the markets on Friday, which was this day. We are still more or less maintaining a relatively bearish stance here. We feel that unless the markets are able to pierce this downtrend line here, you could draw it about like that and call this dangling stuff. We still have to be relatively bearish. We were commenting in our newsletter this week how there was about 6 days straight down in the market, and then you had this very weak retracement, and there was basically 3 days of very minor sideways to up action. And this action here that you're seeing on Friday was mostly in the form of a relatively large gap. If you look at the spider on the dailies, you see it looks kind of different. You don't see the big body candle there because there's a gap here. And part of this we attribute to the fact that it was options expiry Friday. It's usually bullish. Stocks are getting yanked up a little bit, getting pinned to different strikes. So we saw a little bit of strength there. We shall see if that's going to continue to follow through. Again, as we were saying, unless we can break out above this trend line and hold here, I would say even we'd have to break over this swing high to really get a little bit more bullish. We'll have to see. It is end of the year. People are talking about maybe Santa Claus rally, but for now we're just not seeing it. We're going to maintain more or less a bearish stance on the market, and we'll see how things go early in the year. The NASDAQ composite is showing a little bit more relative strength than the S&P and the Dow, because as you can see, it's much closer to these swing highs here. The Russell on the dailies is the same situation, right? A little bit closer up. Oops, come on, get on there. There's your top right there. And also the NDX, same situation, right? Where you've got a little bit more strength than the others. All right. One of the things that we were looking at this week, we've been mentioning this in our newsletter all week, is the fact that the breakout in gold is finally happening. So those of you that are gold bugs and are bullish on the metal, we would like to say here that we have officially in the newsletter taken a half a position long here at just over 80, where we broke the trend line, and we're looking at this area right here to put on the other half. If GLD can crack the 80.92, I have it listed actually as 81.05 is where we're going to get busy. Stop is here under the last swing low. Okay, pretty much just multiply these numbers by 10 to get the actual spot price, in gold. So somewhere right under here, the pivot here is 78.36. We're thinking probably just under 78 to lose the ascending 50 MA. If we lost that, we think fine. We think this is a relatively long-term trade. This GLD could see over 100 in 08, and which is a pretty big increase, maybe even higher. And this risk from here to here is about 4%, which is decent, we think, for the amount of time to hold here. So gold is basically finally starting to perk up over the trend line. It may fake out a little bit and chop around and continue this symmetrical triangle here. Time will tell. But if so, hey, we know where the stop is, and we're only in half the position. Other half long over this pivot here. Okay? Going forward into 08, there will still be one more video on December 30th where what I will do is I'll do a bigger rundown of all the sectors out there, and we'll kind of get a good game plan going for where we think sectors and things are going in 08. Before that, let's have one look at the overall volume matrix for this week that just passed. Those of you joining us for the first time, this is a quick glance from a bird's eye view of what the Dow, the S&P, and the NASDAQ did each day during the trading week. Red and green is pretty self-explanatory. The volume increase on the NYSE or the NASDAQ tells us if there was distribution or accumulation. We did have a distribution day on Monday, which is where the markets go down and the overall volume goes up. We had really weak breadth ratios there, under 20 as well. I did not give the market an A for accumulation on Friday because it was options expiry, and this day always has huge increases in overall volume that are not really legitimate. It's just because the morning of the third Friday of each month is just crazy volume. And here on Thursday, where the markets went up kind of feebly, I gave the market a small A for accumulation. And like I said, here was the pivot after those 6 days down or so, and there was not an increase in volume. So that strikes us as relatively bearish. All right, so that's it for this week. Remember, next week, December 30th, we'll do a full rundown on where all the sectors in the Sweet 16 are. That's this one, the core sector list right here. We call this the Sweet 16. We'll do a rundown on all of these, and we'll put together sort of game plan for 08, see where these sectors are going, see what's going to be hot and cold. Until then, On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course all the good people in Chicago, Illinois at Thinkorswim, I wish you a Merry Christmas, good trading, and good night.